welcome back to Rockstock Channel. It's Saturday, November 26th, 10 a.m. I am wearing a Michigan shirt today because the number 3 undefeated Wolverines are playing their arch rival undefeated number 2 Ohio State Buckeyes, and it's in Ohio. Michigan won last year. It's going to be a tough game today, but I tweeted out to my friend John Evans, CEO of LAC, who has 2 sons at Ohio State, best of luck. So here we are with Rodney. He was at the Benchmark Minerals Conference in Los Angeles, which I had FOMO about missing. So he's going to give us a little bit of color on the presentation he gave there, or the panel that he was on there. And then he was in London at the 1-to-1 conference where he presented as well. So we're going to talk about that. We're going to talk about, kind of Goldman Sachs and Credit Suisse versus kind of Macquarie on the bullish side. And Rodney published a report on Piedmont recently, and Albemarle, SQM, Livent, and Tesla all had their earnings results. So a lot to cover. And so let's just start, Rodney, with your trip to the 1-to-1 and presentation at the 1-to-1 conference, as well as Benchmark. What did you say there, and who did you meet there? What was the overall vibe, and primary takeaways?
So yeah, I mean, the Benchmark was hosted in LA, so a long haul for me from Mauritius, 12-hour time difference, but good to catch up with everyone. Saw a lot of clients in the flesh. Some we'd already seen, you and I, Piedmont, but I caught up with Atlantic and various, people, Tesla, so on, SQM, saying hello to everyone. In general, obviously a lot happier and an upbeat vibe relative to when you and I last went to the conference in 2019, when times were a little tougher. So despite all the narrative and possible one-off data points and things throwing people off and causing a couple of bearish results, the reality is when I saw the individuals at Benchmark, and that includes the graphite guys with the anode section as well as the cathodes, is they are all seeing a lot of approaches and are all, still engaged for discussions across a number of the parties in the downstream demands. So regardless of what is said, I think if compounded growth of EV sales is to remain, then quite a few companies are running into some potential issues. So they are very, very keen to secure supply. The other thing that was a bit of a standout for me that I've kind of took my eye off, although I was early on it originally and then sort of left it, was Iola Hughes from RoMotion did a presentation on ESS, and that sector is going gangbusters. If you look at the addition of energy in the last year from Bloomberg's, solar, wind, and hydro are very high percentages of that on a year-on-year basis for last year. And if you look at what ESS is attached to, it is largely attached to those. So ESS, I think, is doubling. It'll continue to go, and I think RoMotion said, I don't know if it was the equivalent, I stand corrected, of 6 million EV equivalent in 2025, but to be as big as 20% of the EV market by 2025. And as we know, if you go beyond there, if you look at the addressable market, Howard, of ESS, it's a lot bigger. That doesn't mean to say that sodium won't take a piece of that, and vanadium, and so on, redox. But I wouldn't underestimate that market. And so that will be an underpin of demand as well for lithium-ion batteries for sure. LFP, picking up in that sector, but generally all things, as I said, sodium might, but it's something that people should have a close look at, because in the bearish reports, their numbers for ESS are, in my opinion, too low. At Benchmark, I sat on a panel to do project financing, and my commentary was fairly simple. Junior mining has always and will continue to be largely funded by retail players and then institutions with equity. You don't get debt at early stage exploration. You need equity funding. So bearish reports that send the market down, like we've seen recently, all that does is delay further supply, which we believe is in a structural deficit, and we think wrongly so. So that was the key point that I had to make, amongst other things. You know, there was an MD from Citigroup with me on the panel, you know, and again, largely the narrative I heard from him is, you know, unhedgeable, isn't enough of a future, et cetera, et cetera. So banks getting involved with typical structured finance, like I would have done in my past life, it's very difficult without a liquid futures curve and without the ability to hedge anything, you know, for the future, especially with something as specialized as lithium chemicals.
Just on that point, Rodney, I think we just did this video with Ben Steinberg as a follow-up to the one with John Miller. I expect the U.S. Department of Energy to provide the loans from the Loan Project Office. That's exactly what they're set up to address. The fact that Citi can't hedge, it's not a mature market. Getting long-term, low-cost funding, you know, I think the first half of next year, you're going to see significant checks written from that Loan Projects Office. And we know Ioneer, Lithium Americas, and Piedmont have all applied, among others.
Which is great, but it only gets to that point once they have produced some kind of a feasibility and offtake and. So they're quite advanced. You've got to get to that stage. And that's hugely sensitive to share price. Obviously, in Canada, you know, you have flow-through financing like you do with Winsome, so you can get and Patriot, you can get a phenomenal effective price with that mechanism that they allow for exploration spending only. But it's a hugely helpful thing, because in those instances versus some of the others, I think both Winsome and Patriot raised at nearly double their share price effectively.
It's crazy.
Which is phenomenal, which is fantastic, because it has to go into the ground, but it is really a hugely helpful. So it's good to see the DOE now stepping in the US, because Canada has that mechanism. And then I saw something with Frontier with a critical minerals fund. So each place has to do its own. I guess we'll have to see what's happening in Europe, but bearish reports don't help for the smaller juniors that don't have those benefits. Last thing is to say thank you very much to Simon Moores and the Benchmark team. They always host a great event. They're hugely welcoming and put on, you know, it's very conducive to having everyone chatting and shaking hands and sort of interacting. So thanks again to them.
To your point about these negative notes impacting equity prices, you put out a tweet how you differ with Goldman Sachs. And like I said, Macquarie has been following this market for a really long time. They very substantially upgraded their forecasts in the short, medium, and long term for lithium pricing. We'll put up the charts from that. I don't have them right in front of me, but they were a very substantial increase. And going out, you know, I put out this tweet, much stronger for much longer, because now they're forecasting mid double-digit thousands, I don't know, 30, 40, 50,000 into the 2027 timeframe. And like I said, they've just been researching this market a lot longer, you know, than Goldman has. But Goldman basically put out a note, and I'm going to put this up here. Again, they're pushing this like lepidolite supply story coming out of two of their Chinese analysts, I think, that are on the ground looking at, you know, they've referenced, you know, 4 or 5 different projects in lepidolite. I have no insight into the China lepidolite market, to be frank. I mean, you don't either. We don't have people on the ground in China. We know it's dirty. We know it's 20-to-1, you know, conversion instead of 8-to-1 with spodumene. But, you know, the Chinese have been very innovative in the past in nickel, for example, with nickel pig iron, figuring out how to make products out of lower quality material. So everyone was like very dismissive of 2018 when, you know, Morgan Stanley said the big short, and, you know, they were right for the wrong reasons. We shouldn't, you know, just reject out of hand that Goldman Sachs is wrong. You know, you think they're wrong for a couple of reasons beyond the lepidolite supply issue, but, you know, why don't you share?
I have lepidolite supply in my model, so it's not materially different from Goldman. Where I understand how she got to those numbers. What I'm saying is where I think it is wrong is aggregate supply and battery grade supply are two separate things. I don't think they are correctly handicapping the percentage of new supply that's going to fall into greenfield projects. I think Canaccord estimated at 40%. I need to go through my numbers, so let's just use those. And then look at how many unconventional flow sheets represent in that 40%. So what I'm saying to you is if you are lucky, it's 12 to 24 months to qualify as a greenfield project into the battery supply chain. So if you've got 40% of 2025 supply is greenfield, I see some hiccups between aggregate lithium supply and battery grade supply as a first flag. Then the second flag comes in with restocking. There's a couple of problems. The first thing is when cathode orders lithium, there is almost a 6-month window or more between when that order goes in for that lithium and when it reaches an EV. So there is, when you order something in one half of the year, when the lithium is ordered to go into the cathode, and then the cathode sends it onto the cell, and the cell, the module, and then into the EV, and then the EV's got to be shipped wherever it is. There's a lead lag in that. So in a market that's growing at 30 to 40%, that lead lag difference can be quite big. So I spoke to a couple of recycling specialists as well about production scrappage on cells, and I applied that to this year's cathode production, and made that adjustment, and then made the adjustment for the lead lag on the order, and then how many cells were sold, and then what was the installed EV. But then you've also got to make an adjustment for quality controls of cells once they've made it through the production scrappage, but they arrive at wherever they go to. There also isn't 100% clearance from that level. And then there were battery cell replacements by some guys that's outside of new orders. There's problems with older orders that need to be fixed. And if you go through all of that, the restocking number, actual restocking number, is much lower than what Goldman's has. And one of their main central arguments for their thesis is basically restocking is going to drop substantially next year and then literally disappear in 24 and 25. And I don't understand that. In a growing market, if you want to keep a fixed number of weeks or months of inventory, as the market expands, well, you need to keep restocking and growing those inventory stockpiles. So I have a different number to Goldman Sachs. I think they're short. And if you make that adjustment on the restocking alone, you're going to remain in deficit next year, and it will continue going beyond that. So there's no point in oil. I mean, the other thing is $11,000 a ton in 2024. How did no one's cost? That is nonsensical. So I understand the way that you got there. I don't agree with the practical realities, and I discussed this a bit with SQM at the benchmark and a couple of other guys, and spoke to some of the recyclers or whatever to check my numbers. So I think battery grade supply and aggregate supply are two different things. There's a chart I've got from 1-to-1 where I show aggregate supply is actually in oversupply for the next few years, but battery grade is in undersupply. So there's a big difference on that front, and I think so we remain in a tight market.
So could you explain if overall aggregate is an overall aggregate oversupply, but battery grade is in shortage? Is there a dichotomy in price between battery grade and non-battery grade, or
well, first of all, there's another thing that you've got to be careful with is the reprocessing. So if I make something that's non-battery grade in South America and I ship it to China, and somebody reprocesses that material into battery grade, in South America, I've registered a production of a ton, and in China, there's a registering of another ton. So you're double counting. That makes sense?
Yeah. Because
someone says, oh, there's my numbers. But actually, what's happened is it's been reprocessed, to make battery grade. So that's one thing, a risk is the double counting. The other is you can have stockpiles of non-battery grade while there isn't enough reprocessing capacity in the market, or you can stuff it into another market if it's low iron. Who knows? You can put it possibly into that specialist market or into the grease market or whatever it is, But battery grade itself, in terms of what's ready to go, that number is lower. And there's a lead lag on that. I would say there can be inventories that sit in various different places, but that doesn't mean it's oversupply, because it eventually will find, where it needs to go. And the other thing, of course, is recycling. Well, recycling is all fine and well, but if it isn't recycled and then reprocessed into battery grade, then what is it? It's just technical or some version of non-battery grade. So there are nuances here that you need to tweak. The only thing that will validate their thesis, and this is the thing you've mentioned before about being right for the wrong reasons, but if there's massive demand destruction, that could cause, that of course would be a problem. I don't see how. I think if you look, that's another key takeaway I had. I think it was at Benchmark, is NEO and all of these guys, XPeng, are setting up European sales rooms. So it looks like China is now going to go on the offensive to export EVs to the rest of the world, already to Europe. I presume they'll have a go at the US, and they certainly will come my way. In Africa, China's big on selling here. I can't see ESG concerns or, battery pack provenance or whatever being that big an issue in Africa as it might be elsewhere.
Well, this point on, and one of the points in the Goldman note was that a lot of demand was front loaded, like China. There's subsidies that are expiring next year, and that demand in China was artificially inflated this year, and next year it'll slow.
That's their argument, and you would, so it does tie in. If you saw a problem with cathode demand, if there is going to be a drop off in EV sales, the waiting times don't necessarily suggest that to be the case. I mean, they might have narrowed. The other thing, of course, is that we know in other parts of the world that there is waiting times and delays to get an EV. So I don't see why that battery cell production or what have you couldn't be redirected to elsewhere in the world where demand is still there. So is the bottom going to fall out of the Chinese market? To my mind, in terms of government and in terms of companies, they seem to work together, and they're adamant to dominate this market. So,
I mean, to the extent that China goes, if it does go any soft, I mean, the US market is very strong. We just heard that GM had their investor day. Tesla is talking about the Cybertruck, and so many new models. Ford and GM have big new models. LG Chem just announced a huge cathode plant in Tennessee. The cathodes are coming. We talked about that last year. Like where are the cathodes? In order to have the localized supply in America. Do you want to talk very briefly? You published this report on Piedmont. There's been a lot of activity on your side in the last couple of weeks.
Yeah, so I did a report on Piedmont. Surgeon General's warning, they are a client. It's probably the most bullish I've been on Piedmont, although the price is up from the past. I think if North American Lithium, through their JV partner Sayona, gets up and running, and they've just had another announcement suggesting they're even closer to production, I think the generation of free cash flow and earnings for Piedmont at some point, I guess when they ship, first commercial shipment goes out, who knows, let's just call it around the middle of the year, that could be a huge catalyst for Piedmont. If prices of spodumene are lower than where they are now, but on my price curve, on just that project alone, they could be generating more than $500,000 of EBITDA on an enterprise value of less than $1 billion. And then you've got Atlantic, which we are very keen on, and we think that is going to get up and running in a DMS only. So Pilbara Minerals' BMX auction price flies in the face of the bearish reports, because that was up 10% with an 8,575 per ton SC6 CIF equivalent. If you do a lithium chemical price equivalent on that spodumene price, you're basically looking at $80,000 a ton VAT inclusive in China, with zero margin for the converter. So is there a price collapse coming? I don't know how that's possible. Piedmont, with both North American Lithium and Atlantic up and running, could generate $1 billion or very near $1 billion in EBITDA just from spodumene by 2025. So on an EV to EBITDA multiple of less than 1, that seems to my mind to be very cheap with very low technical risk. It's a DMS only project, Atlantic, and North American Lithium has the same operators as before. They've put in new equipment to refine the process. So let's see. I think that's a major catalyst for them.
You've seen the re-ratings in Sigma and Core. I know I'm seeing on Seeking Alpha and other people telling that Sigma is still cheap, right? Because it's only on 3 times EV to EBITDA in like 2025, and they think it should be 6 times. Here you're saying that Piedmont, which is going to be selling the same spodumene, is at 1 times. They're going to produce in a similar time frame, first production, as Sigma is.
And into
With
second, and then
Sayona.
you've got Tennessee with a DOE grant, and then you've got North Carolina, which they are still confident they can, progress that project, and that is more optionality. So I think, put simply, if I remember correctly, how they fully domiciled in the US. If someone wanted to put a footprint into the US, now that you have LG putting a cathode plant into Tennessee, and you've got Redwood Materials with pretty big ambitions as well on cathode, he's talking 100,000 by 2025 and 500,000 by 2030. Now, you've got someone to sell to domestically, and that changes the landscape. So all in all, I definitely one of the companies I'm most positive on. If you believe that North American Lithium is progressing as Sayona says it is, and it can produce half decent material, then I think there are good things coming. It would make every sense in the world for someone looking for a North American footprint to do it. On that front, anecdotally, just chatting to a number of people at the benchmark conference and at the one-to-one, is the growing acknowledgement of Canada's role, I think, in becoming a major force, in lithium over time. Cam Henry with Green Tech, you've got, lots of players, Allchem, Frontier, Winsome,
Critical Elements just got their permit.
Yes, exactly. So that's also a huge, and they've been in discussions. So I expect to hear good news on the strategic front for them, because they've had a lot of time to have lots of strategic discussions. You're right. And again, a clean material they have, as do others, and a great clean grid. So I do think there is a model for Canadian spodumene to be either converted in Canada or the US, like a Tennessee lithium project for Piedmont. I gave a presentation in London on why the structural deficit is here to stay, gave a lot of these arguments. It was nice to see for the first time lithium taking, I had a prime speaking slot before lunch on the first day, which is a big change from it being in the footnotes at the graveyard shift on the second day. So I presented, I noticed there were a lot more companies. I said hello to Cyprus and Alpha and Galan, much more lithium companies represented, and far more interest and full diaries of the guys there. Although BMO presented on the commodities in general before me, and it was very encouraging to hear the elevated prices for a few years, and then a still good long-term price, mine's 30. Theirs is around that as well. So that's a big change. I think a slightly deeper understanding of the issues faced. So that was good.
I'm speaking on a panel like Deutsche Bank's having their conference in New York. It's kind of consolidation and M&A. You were talking just about Piedmont, sitting there at 1 billion market cap, 1 times forecasted EBITDA. If I think about this time last year, Rio Tinto paid whatever $860 million for the challenged asset. Rincon, Ganfeng bought Plus Petrol for $950 million. So both of those things were for sale. I was talking with why hasn't Livent been bought? Why isn't Allchem? If Rio Tinto and Ganfeng are buying much riskier earlier stage assets in Argentina for nearly $1 billion, like why wouldn't these things go for multiples of that? And I do think that you're gonna see that. One interesting thing, I listened to the Tesla call, Albemarle, SQM, and Livent. What were your thoughts? SQM had unbelievably fantastic results. It has to be said, in 2018 when Eduardo Bertrand and Corfo, they had the whole redid their concession. A lot of people, ourselves included, said that no NFW that SQM would be able to be producing 150,000 or whatever more than that before 2025. And here we are. The facts speak for themselves. They are producing 150,000 tons run rate, up from like 50,000 in 3 years. That's pretty impressive, and they're getting amazing prices. So can they
I
continue
was
to
about to
grow?
say, timing is everything. How they're getting amazing prices because you can sell battery and not battery grade for a great price. So in a market this short, so this is very similar. Same thing happened in 2016 and whatever it was, when the market was short, you could sell non-battery grade for a great price. So hats off to SQM, and cracker. I mean, the government must be ecstatic because they'll be getting paid.
They're the
A
biggest
fortune.
taxpayer. They're the biggest taxpayer in the country now. That's a huge statement up from Codelco. Like the volume of tons of copper that leave the country is much, much higher.
Yeah, look, I think once you get used to that revenue, you won't want to give it up.
I think they'll be pretty smart about it. And in fairness to Argentina, Argentina has some of the best policies toward lithium.
No, I tell you, I got to take my hat off to Argentina when you chat to the guys. I mean, in challenging circumstances, there are, of course, issues with capital flows and this and that and the next thing and equipment, but they are pro lithium, and testament guys are still buying and looking to develop projects. So very impressive. Yeah, the SQM results were good. The price is good. I think, again, as it stands, they like to be 20% of the market, and they're going to be roughly that this year. So the market's going to be a shade under 800,000. So 160, here we come. These guys are going for it because they like the 20%. But equally, if the market were to waver a little bit, I'm sure SQM would happily, build up some inventory because they've, I think, run dry. In their commentary, they're always conservative about how far they'll forecast, but they said they don't see any issues going into 2023. So they're not seeing a problem. I think the other thing that's a bit of an issue with the reports is you've had contract pricing rolling off from bad deals coming into more spot related or higher rolling forward. And, you're seeing what contracts downstream are prepared to, prices they're prepared to guarantee and so on. So that flies again in the face of 11,000, or I think sub 20,000 is a thing of the past. And I think anyone who's worth their salt can negotiate with downstream and get 20,000 or better as a floor price for however long you want. So I just, for battery grade. So I thought SQM was good. Livent took a hit and then it sort of bounced back. For 15 years or whatever the number is, they've been at 20,000 tons. They need to now move that forward. So another thing that was flagged by someone in the press, and it's something that I've said to you all along, is commercially, if you take ESG and all of those things out of the way and politics, China is by far commercially the best place to put a plant. And there's plenty of demand, and you've got Livent, SQM, and Albemarle all building in China. So that's a reality. That
and elsewhere, but I mean, it's
regional.
It's regionalized.
They're still putting in big plants. So yeah, I think we'll have to see. Credit to SQM. They know their timelines, and I guess if they need to stay at 20%, they are pushing covalent, and they're pushing hard. They're looking to get that up and running, I think, by 2024, Howard, if I remember correctly, second half.
Yeah, I don't remember the time frame, but they're definitely pushing hard on that as a hard rock store.
Yeah,
they've been working on that for a long time.
You've got Africa, you've got Brazil, etc., but Australia and Canada, I think, are the two big powerhouses that are going to come through. And SQM, now in hindsight, if you look at what they paid and what they can produce, was a good deal.
Oh, they paid a fantastic price. Even Tangxi paid a good price for their SQM shares at $65. It almost bankrupted them, but they're like.
So and IGO's deal, right, into Tangxi, so Greenbushes. So in the end, and Albemarle into Wodgina, it all looked rosy now. I think the number of players is still small, and I still think that sense will prevail. There's no point selling extra for a lower price when your net for net leaves you in the same place. So this isn't about survival now. This is about more finesse and nuance as to what you produce and what you sell. From an EV demand perspective, I flagged this before. In Europe, the CO2 emission policy is flat now between 2021 and 2025. I'm not saying there isn't demand, but OEMs aren't scrambling to sell in that market because they don't have to avoid fines anymore. They're good to go until 2025. I think around 2024 to 25, you'll see that blip up. But I think longer term, we know most major markets are talking about ending the sale of new internal combustion engine vehicles between 2030 and 2035, which means it makes no sense from a customer perspective to be buying an internal combustion engine later in this decade. It really doesn't. And that also, why would you buy a second-hand one, which is going to cost a fortune in repairs and everything else, when EVs are far more resilient and you've got long life batteries? So on the line, but I just don't see a long-term trail-off in EV demand. And then you mentioned Cybertruck. I think lots of people want that thing. I don't know what price it'll come in at, but that's supposed to be in commercial production by next year. And then things like the semi, which has IRA benefits and the tax benefits, I think up to $40,000 a vehicle, and others. I think the batteries will find where they need to go to. And the US is now, I think from here on a tear. We've said for quite some time, it will be the highest growth market, I think, globally coming up. The US is definitely going to be, one to watch. And China won't want to fall behind and see that shift, especially if the US does start with cathode and with battery, which means they could start exporting, and then it's game on globally.
It's clearly coming, and it's great to watch. So I listened to the Mineral Resources AGM, which is always colorful. He basically indicated that the Marble joint venture is largely done, but it hasn't been finalized. But he expects that to be done and dusted by the end of December. I think they're pushing hard. Albemarle is just slow. It's more just they've agreed everything. Just legal documentation takes its toll. I believe he was coy on the spinoff. Okay, he was kind of like trying to, but he didn't say no. Right. My read of the body language there is that this is just too much of a valuation arbitrage, that the U.S. listed for the lithium business, when Mineral Resources is going to be producing the equivalent of 120,000 tons of lithium hydroxide within 5 years. And the multiples affixed to that are in the double digits, where they're giving, mid-single digit multiples in Australia.
Wodgina, at face value, if he does the extra trains that he's talking about, is Greenbushes. It's as big as Greenbushes.
Yeah,
and he owns half of it. So what does Tanshi trade at? What is Tanshi's market cap with a quarter of Greenbushes and a bit of SQM and domestic volume?
I think Albemarle is a better comp, because it's hard to comp a Chinese valuation to he'll do a U.S. listing. But if you take Albemarle as a 30 billion market cap, if you assume 2/3 of that is lithium, that's 20 billion, and they're producing less than 120,000 tons right now, which is where Mineral Resources wants to get to, in 5 years. Mineral Resources only has like a 15 million Aussie market cap, right? So I could make an argument, I do make an argument, that Mineral Resources lithium business could be worth $20 billion in 5 years with a US listing, and they're currently trading at 12 billion for their entire business. So there's probably 4 times upside just embedded within their lithium business, with some just back of the envelope math.
You've spotted that. We liked Minres a while ago, and you've doubled down on it now, and it's near its 52-week high. So the market agrees with me.
But to your point, and the point we just were talking about, SQM or West Farmers seemed to pay a high price for Covalent. Tangshi looked to pay a high price for SQM, and Albemarle a high price for Wodgina. Even if you're buying at the top of the market, this higher love is going to continue, because prices are much stronger for much longer. And when you have a dip like you're having right now in the market, all of these retracements, and it happened over the summer again, keep talking about it. Take advantage of these opportunities when the stocks dip to buy, and you could buy very high quality companies. And at the same time, we were talking earlier this year, you met Matt Fernley. I spoke to him this week as well. We're going to have him back on the channel before the end of the year to talk about lithium and a few other things. But in our interview earlier this year on how high the lithium price could go, you guys were talking about, the most upside is at the drill bit. And here you've seen just in the last month how an IPO of Winsome at 20 cents is now, well over $1. It's up 5 times based on visuals of good spodumene. So we look forward to the assays there. The final thing I'll just say is that Tesla, or Elon Musk, bought Twitter, right, for $43 billion. We thought he could have bought Albemarle, right? He could have bought Albemarle personally, right? If he does it, just like he did Twitter. If Tesla doesn't want the ESG risk of being in the mining business, maybe Twitter or Elon Musk himself can own software markets.
Yeah, let's just, that can be our parting conversation. It went from battery day, just put some salt and water into clay and you'll make lithium. Now he's looking at a hydroxide plant or what have you. And now we might need to get into mining. So this is where we come around to. So here's the reality. We had I'll just pick the clay up and do the mix and swirl it around, take it out and put it back story, with a Tonka
and he has said mining repeatedly. And Adam Jonas of Morgan Stanley asked him specifically on the conference call. So watch this space. It's going to be a very exciting
I think the reality is, Howard, if he does 50% this year and 50% next year, about 24 or 25, I'm telling you, they don't have what they need to keep that 50% compound going.
The Tesla bull, Tesla's at a 2-year low. Albemarle is at a 2-year high. Like, the dichotomy is insane. But the Tesla bulls are now, they keep talking about FSD, right? And AI, and the robots, right? But they're deflecting, the bull case. Yeah, I'm bullish Tesla. I think long term. I've never owned it. I'm considering buying some now, but lithium shares still just seem a better bet for me. But I do sense a bit of a shift, a continuing shift in the narrative away from if they don't make their 50% EV sales targets, it'll be made up for by, the FSD margins, which it might be. But I think the 50%, as far as the eye can see, EV growth,
you can only sell
is
FSD
at serious
if
risk.
you sell an EV, Howard.
That's a fair point too. Yeah, but people who have cars, can't they get FSD later? Or no, you have to buy it at point of entry?
I thought you had to do anyway.
Yeah,
the
you probably do.
Is they need to go hand in hand. I'm sure they'll make some maneuvers. They've been good up to now, but the reality was all of this dismissive of how easy it is to do this, that, and the next thing is coming home to roost.
100%.
The unavoidable truth is, if you want to supply and you want it at the right price, then you're going to have to step beyond an offtake agreement. Because negotiating terms on an offtake hugely in your favor when there are 20 guys waiting to meet with the same person you're just not in that position anymore. Tesla had a dominant position for years because they were the biggest player. Now suddenly there's a range of people, waiting to compete. I think it's unavoidable. M&A still to come. I know we know where we think that there's there's real value. I think, as I said, Piedmont, I think in North America, but as soon as the Canadian story is validated, Critical Elements gets a partner, a couple of other projects, Nell gets up and running, Allchem is progressing or what have you, there's going to be some consolidation play in Canada.
We've said it before, we'll say it again. Rio Tinto, we know, is talking to, they hired investment banks, show us your deals. The most obvious play for them would be Livent. And then I believe that Quebec and Ontario can very much look like it does in aluminum. Rio Tinto and Alcoa are all over aluminum. Rio's in titanium. Rio just signed, we talk about, money from government. The SIF, the Strategic Innovation Fund, I think, is partnering with Rio Tinto on titanium. I'm hopeful to see some stuff on lithium, out of them. Let's just leave it at that. Thank you, as always, Rodney. This was a good update. I can't believe, I don't know what the hell happened to my voice, but I'm glad you did most of the talking on this video. To be continued. Higher love by the dip.